We want to move on to our second take because we want to look at the company perspective on the economy. Ford, of course, coming out with its earnings after the bell. Shares higher after the car maker's profit revenue significantly beat estimates, signaling, well, maybe demand is still strong for big purchases, or more that supply is so tight. Bloomberg's Ed Ludlow is with us. They are talking, the CFO is talking about cost-cutting efforts, not going into detail of how many jobs are lost. But I am interested also in the Bloomberg intelligence piece being put out about Ford Motor Credit and really how we're starting to see a hit to earnings there. Fold this all together for us, Ed.
Yeah, it's interesting because if we go straight to the credit line, this, of course, is Ford's finance arm, that the picture for the current period and full year fiscal 22 is not as positive as is painted in the rest of the earnings statement, earnings release. And I guess the question I have for you guys is, like, do we take the company lens on the world as a leading or a lagging indicator, right? They're saying to us, Ford, in this statement, that we beat on the bottom line because A, demand is intact, but we still have pricing power. Remember, in the second quarter, Ford grew its US sales in particular at a time where the industry was seeing declines. That's the first thing. But they're also acknowledging that things are really difficult, right? They're saying costs are going to rise, particularly into the next quarter due to inflation, but they're facing $4 billion of commodities headwind that they're able to offset, they say, with pricing power. This is a bit like dog chasing tail, and I'm trying to work out here, are they saying that they're not able to supply, so the demand picture looks really good, or are they just saying the demand picture here is really good?
I mean, hopefully we can work through that together. I don't have a great answer for you, but it is striking to me, all of this focus on the F-150 Lightning, which is starting to ship out. And Ed, I'd love to hear your thoughts on whether that's starting to cannibalize some of their traditional F-Series pickup trucks.
Yeah, I think the thing you have to remember as well is that on a product like this, the company is supply constrained. Supply constrained meaning demand is far, far greater than they can currently build. You know, we only go on the wording on the call with CFO John Lawler and what's in the earnings statement, and very high up, they're talking about political, economic uncertainty. But the rest of the narrative is that demand is intact for both sides of the business and that they expect it to remain strong, both on the ICE or combustion engine side of the business and on the electric vehicle side. You have to remember that what Ford was able to do with the F-150 Lightning is hit the ground running. They don't do what many have done with EVs, which is bring a very high price model out first and then go to the lower spec models. They're serving a really big commercial customer base with the F-150 Lightning Pro. That's helped them hit the ground running. And there's demand on the consumer side as well. And they've been able to ramp quickly. They've had problems with the Mustang Mach-E, with a big recall. But everything I'm reading in this statement says the demand is intact. Our ability to supply is constrained. What happens when those two things level out? Are they in trouble? Doesn't seem like it.